So one of the biggest myths about buying a home is this, okay? The whole you need 20% down thing. Now you do need money down, but do you want to know what the truth is? So for many first-time home buyers, that 20% down is simply not true. So in fact, depending on the loan program, you may be able to purchase a home with much less than 20% down. Some buyers qualify for loans with as little as 3% down, and certain government-backed loan programs may require even less. But here's where many buyers get surprised. The down payment is only one piece of the puzzle. You also need to think about closing costs. Closing costs can include lender fees, title work, recording fees, prepaid taxes, homeowners insurance, and other expenses associated with completing the purchase. And here's something that many first-time home buyers do not realize. You may be able to ask the seller to help with some of those costs. These are called seller concessions. So depending on the type of loan and the terms of your offer, a seller may agree to contribute money towards eligible closing expenses such as lender fees, title charges, prepaid taxes, or homeowners insurance. For example, if your closing costs are several $1,000s, the seller may agree to pay a portion of those costs as part of the negotiated agreement. It's important to understand that seller concessions generally cannot be used as your down payment. However, they reduce or can reduce the amount of cash you need to bring to closing by covering allowable expenses. Combined with a low down payment loan or a down payment assistance program, seller concessions can make buying a home much more affordable than many people expect. So how much money do you actually need? So that answer depends on several factors, okay? It is the type of loan you choose, the purchase price of the home, your credit profile, whether you qualify for assistance programs, and how your purchase offer is structured. In fact, the structure of the offer can sometimes be just as important as the purchase price itself. That's why I always encourage buyers to start with a conversation with a trusted lender and an experienced realtor. A pre-approval letter doesn't just tell you how much house you can afford. It helps you understand how much cash you'll likely need at closing, so there are no surprises later. So if you've been putting off buying because you thought you needed a huge pile of money saved up, you may be surprised to see what options are actually available today. So in our next episode, we're going to talk about mortgage pre-approvals, what they are, why they matter, and how they can put you in a stronger position when you're ready to buy. Hey everybody, I'm Brian Capel with Wiseman Real Estate, your Athens, Ohio, Southeast Ohio realtor, and this is the First-Time Homebuyer Series. Thank you so much for liking. Be sure to like, share, and subscribe to my videos. It means a lot to me. Have a blessed day. Thank you.